Everybody. Good afternoon. Good afternoon. Hope you're well. Mark, you there?
I am. How you doing, Dan?
Oh, good. I forgot you were coming in here. Glad to have you here. And folks, we're glad you're here today. Mark and I are going to be teaching Mark, can you see my think or swim there?
I can.
Yeah, Mark and I are going to be teaching, I think, a very important class starting next Tuesday. I moved it because I'm going to be out of town a few days here, and it'll be starting next Tuesday. It'll be September 15th, and it'll go a whole month. And we'll be going Tuesdays and Thursdays, and we're going to be what the class is going to talk about is, trading the fourth quarter and the election profitably. And you can see already with just a couple days in September, what's that song, Mark? What a difference a day makes, or what?
Oh, you bet. And I was going to say, we didn't order this just for the class.
Yeah.
Class planned before last Thursday. It's not our fault.
No, that's right. And I think for people who were thinking, hey, this is easy, I just get long, go to my ATM machine and catch the cash before it hits the floor, it may not be working like that right now. And so I think it's important that you guys have a plan. I just think over the next 3-4 months to finish the year with the election, with earnings, with COVID, and name it, whatever else is coming up, come with us as we navigate through this and help you as far as what to put on now, what to put on next week. And I just think it's challenging navigating through this, wouldn't you say, Mark?
Very challenging, yes.
Yeah, it's so that's what we'll be doing. And the nice thing about it is you'll get, because we're not focusing, a lot of our classes will focus on one strategy, calendar or some type of butterfly or credit spread or something. And what's nice here is you're going to get some different ones, because what we're basically going to be doing, it's every Tuesday and Thursday at 1 Central. It'll be, we'll make a plan based on what the market's telling us. And then we will, we might put a butterfly or a calendar. So you're going to get a very broad education in terms of learning stuff and more how to navigate through the market. So I think it'll be a great class. We don't normally do one like this. So I think in terms of navigating through, I don't know if I could pronounce this word, Mark, tumultuous. That's a word, isn't it? Tumultuous.
Yeah.
I don't know if I could spell it, but I heard it somewhere. Tumultuous waters. And so let's jump in. We'll just talk a little bit about the market here. And again, I think, Mark, as we look at the market here, up here, I just have a 1-year price chart of SPX. And I just have very simple, here's the 200-day moving average, here's a 50. And kind of the telltale, at least one of the telltale signs to me that something was going to happen in the market, right? Whether we went up fast or did this down move, was this little blurb for like 2 weeks before the move here. We went up like 200 points in the SPX, and VIX went from the lowest it's been in 4 or 5 months, 22, up to 26. And that culminated in I kind of like a little bit blowout up day there, that little white candle where we're up 1.5% in the SPX. I believe, if my memory serves right, was that last Wednesday, Mark?
I thought it was Thursday. It was the big move, wasn't it? I could be wrong.
I forget. Well, what were the 2 down days other than today? It was
Thursday, Friday, I believe.
All right, so then Wednesday had to be the maybe that up 1.5%. I don't remember. Let me just see what that is here.
It probably was Wednesday up, Thursday, Friday down.
Yeah, so the final up day was the 2nd. Okay, up Wednesday, and then Thursday, Friday. And again, this is very, the last time this little doodah where we had a really good move up and the VIX went up 4 points. The last time I saw, at least I remember, was the end of 2017. VIX was a lot lower. VIX went from 10 to 13, and the SPX kind of flew up, and then it got hammered in January. So again, I think, all this to me is pretty normal. What the heck do you expect? You got this since the lows in March. We literally have gone up a ton, right? From the lows. And I think this is just normal. I don't really care what the financial journalists say. This is just normal going down. And I think things got a little bit overboard. Again, the $1 million question here, Mark, is, what do we go? The SPX and a lot of stocks are near the 50. What are your thoughts, Mark, in terms of continuance of this?
Well, I think it's so hard to tell which way it will go because this market seems to have resiliency because of all the cheap money pumped into it. But we certainly are right for quite a pullback. It'd be totally reasonable. So I think you have to be on your toes for both directions.
Yeah, and I agree. Let me just say one thing here, just to give people a little perspective where we kind of the playing field we're looking at. And I just want to just do this real quick. Long portfolio in spec, and this would be I'll just put 2 weeks ago and then today. And so how we, if you had a 100K portfolio and you're just trading options, how would we allocate dollars to it? And I put things into 3 categories. I mean, you also could put, here's cash, so 4. But this would be spec. Everybody knows what spec is. Spec would just be, hey, I think the market's going up today or going down tomorrow or the next 2 weeks, or a particular stock based on technicals, late night pizza, or whatever it is, Fibonacci, spec. And you could buy a put, buy a call, buy a put spread, buy a call spread, directional calendars, butterflies. We do some back spreads, but that's spec. And then long portfolio would be neutral to bullish, the view of an investor. I think Apple or the market's going up over the next year or two. And so it's intentional long positions every week. It'd be like put credit spreads, long mutual funds, long stock. But again, we do all options in the portfolio. It could be a long diagonal as a covered right substitute. Some type of a put credit spread is a substitute for a cash secured put because they're much cheaper this way with options. And so this would be your neutral to long portfolio. And then income would be more range bound stuff based on probabilities and decay. And that'd be your butterflies of various versions, calendars, double diagonals, that type of trade. So with that being said, 2 weeks ago in the income part of the portfolio, because things were going, we had a nice range and people were doing well, 50%. Today, I don't know, Mark, if I should even go lower, but I just put it at 30, right?
Oh, yeah.
And again, folks, without getting deep here, because Mark and I never get too deep on things, it's pretty simple. The reason we're not doing range bound trades as of the last 3 days, because we ain't in a range right now, right? If you can look at this, right? This is like straight up, and then this is like dropping. I don't see a nice little range, right? And I see big red candles, the average true range, which measures the width or the width of the high and the low in SPX or any other vehicle on a daily basis. Things are really moving around. So let me say this in English, Spanish, and a little Somalian today. I haven't done much Somalian lately. We're not doing range bound trades because we're not in a range. How's that? Right? when we get
As good a
more,
reason as any.
yeah, when we get a little more sanity, we'll be back in. Now, the long portfolio, neutral to bullish, 2 weeks ago, I was looking maybe 30%. Today, I might be 40, but you don't know, right? I mean, in other words, as the market goes down more, if if you like something, the market in the last, 2, 3 days, we've come down off the highs of 35.88. I think we've come down 5-6%. But so would I put a little more in the long portfolio? Yes, but you're a little careful, right? This could be it here, or we got a lot more to go. So I would more dabble in that. Spec, 2 weeks ago, 10%. I'd still be about 10%. And then cash, there's 10%. Now it'd be up to 20%, right? And you can argue with these numbers. We might even be a little lower with this income, but that's at least where we're at today, or what I'm looking at today. Mark, what do you think of those? Would you tweak those a little bit, or am I off on something?
Yeah, I might even have a little less money in the market, but certainly no more than that. I agree with you.
Yeah, you mean like the income?
Oh yeah, less income, maybe a little more cash.
Yeah, and that's a good point. I think if push came to shove, I agree with Mark that cash could, we could easily be 30% cash or more, and income you could argue could be 25%. Long portfolio, again, I would do a little bit there, but less size and stuff because again, we've come up so much. Is this it? I don't know, right? And Alex says, do you use volume profile indicator, ticks, market internals for option trading? No, I think people, I think there's nothing wrong with all those things, Alex. I think we try to keep it simple, just because Mark and I don't really understand all these things, right, Mark? We don't understand.
That's true. I'm not even sure what that just was, he said.
Fibonacci and Gubin. We have a lot of veteran traders in the community. They'll teach us enough technicals to be dangerous. But, the bottom line is for the income, I think most of us can see, it's the same thing. If you're out swimming or surfing in the ocean, you can tell the 3 indicators where you need to get back on sand. A, you see sharks. B, you see lightning. 3, the waves get up to about, 15 feet. And so, when we're not in a range, we can kind of tell. But we do look at the VIX levels, and we look at ATR and VIX levels and stuff like that, which will tell us when to get out of the water. But we don't do too many of those things, even though I think if you look at them, Alex, I think some of those are pretty good indicators. And now, looking at a couple trades, and again, I want to be careful here. Sometimes you say, well, when things are good, we'll be doing more income trades and calendars and stuff. Yeah, but we're also assuming something, right, Mark, that people understand how to manage these things well, right?
Exactly.
Which isn't the case. We may go in at certain times and do iron condors and calendars because we're comfortable. We have a good idea how to manage them, but that doesn't mean that you need to just, if you don't know how to manage them, no, we wouldn't say go in. So looking at Mark and I, neither of us are really doing anything right now from the income. Long portfolio, maybe a little bit. A couple quick ideas in the market. I'm just looking at a couple ideas just to really, even though we're not doing much, if we got a little more range bound, here's an idea. One to look at. I might have to tweak this a little bit just because we've dropped a little bit in the last 10 minutes. Let me just tweak this. But if things settle a little bit, one of the great things about iron condors is that you get a ton more room when the volatility is higher, right, than you do when the volatility is lower, and you get a little bit more credit. So here's an example of an iron condor I was looking at that was pretty much delta neutral. Let me just tweak the strikes, Mark, because we're dropping a little more since the class started. 35.90. Oh, I'm looking at the wrong, what is this? Ox 16. So folks, I'm looking out about 38 days. Just to give an example of things, get a little more stability here. I just think it's a little early to jump in. But let me just show you couple ideas and why they will be very interesting trades. Let me just tweak the strikes, 36, 40, okay. So here would be one. Wait 1 second here. 3010. All right. So all right, so here she is, where the underlying is at 3360, and we're what, October 2, so that's like what, 36 days out, 38 days out. That is Ox 16, 38 days out. And again, for 38 days out, we're able to sell the 3640 calls. It's the expiration graph, and the 3010 puts. So you're getting about 150 points protection on the downside, about 300 on the upside. Mark, we haven't seen these numbers for months, right? Because the vol.
Oh, no.
I mean, this is the high end of the range. We've been looking at the VIX range of maybe 20 to 35. And so we're closer to 35. So we haven't seen this kind of room at an iron condor, which is out of the money call and put credit spread in months. You say, why wouldn't you put it on today with the vol high? Just because right now, I would wait a couple days to see if we can get a little bit of range, a little stability here. Vol could go a lot higher. So, Mark, what's your thoughts on this? Obviously not today, but.
Oh, no, not. I mean, you'd want to wait because vol can definitely change here very quickly.
Yeah, but it does show you that you're getting, I think this one is about $1.50, $1.50 to $1.55 credit for 10 wide credit spreads. And you've got room from here to Buffalo, New York on the downside and here to Bahamas on the upside. So you got a lot of room, but again, patience. I think people think they need to trade every day, but they don't. And, some days, I think Mark, I listened to your, Mark does a session in the mornings called The Opening Bell. And he made a good comment, and I was talking to my son about this, but he made a comment, Mark, you could probably say better than I could, about for people who aren't in the market, right? That sometimes, people are like itching to trade.
Oh, yeah.
Right? And, not being in can save you quite a bit, right?
Exactly. It's like I was telling folks that, how many of you wish you weren't in last Thursday? And everybody's going, oh, yeah. But yet many of you want to get in today, and we're not settled yet to get into non-directional type trades. You're just walking right into more trouble, no matter how anxious you are to trade or maybe to try to make some of that money back you may have lost. It's just not time yet for the calendars and flies. There's other things we could do, but those we're going to have to wait on a little bit, and don't want to rush back in even any more than you wished you were out last week.
Right. And just be patient, as my Irish grandmother would say. That too will pass. And this will pass too. Now, from the long portfolio, you might look at, if you think, with the market down, maybe less size. But again, if you're taking the view of an investor, every week you're doing neutral to bullish trades. If you did here's an example of an OCT2, just a simple put credit spread, right? An OCT2, 24 days out, right? So maybe 24 days out, maybe we'd be in 10 days. And if we just look at a put credit spread here, let's go to the, what is it, 3140, 3130. So this is about 24 days out. And you can see here, again, with the underline at 33.58, and you're selling the 31.40 puts and buying the 31.30s, you know, for 23 days out or whatever, you know, you're about 200 and some points out of the money. And even if we go down further, it does give you some room before you get in trouble. So this has got some resilience for you. And this is bringing in about a buck. Now it's hard to tell, about $1.50 credit. So if you do a 10 wide, your margin would be $8.50 on this. So those are a couple things I would be looking at in small size. The put credit spread, you might do some small size today if that fits in your plan with your long portfolio, which is your neutral to bullish. As far as the iron condor and stuff like that, I would just wait. I'd just be a little more patient. I mean, if you see some stuff, you know, we like calendars. And I'll just give you an example of one. And we've done calendars when the vol's high, but again, you ain't got no range here. So you know, here's an example of a, this is a SEP 18 calendar. This is a 10-day calendar with 3 days difference between the long and the short. And you could see it's very flat, gives you a lot of room on these things. But again, and it's cheap, not cheap dollar-wise, doesn't mean, you know, maybe $3.60 or something like that. And you're getting over 110 points or close to 105 points for the expiration break evens. But again, we're not in a range right now, right? So I think you'd hold your horses, right? And I think some opportunities might come up in the next week. Hopefully by the time class starts next Tuesday, we can dip our feet in the water with these range bound. Any other ideas, Mark? I mean, any spec? I mean, I know back spreads, which eat up a lot of capital.
I mean, that would be one other idea to have you like the back ratio, callback ratio, but it does eat up some capital. But you could do it in something like SPY just to learn it. And
yeah, you could. I don't know.
There.
Yeah, I'm not crazy about putting them on with the vol so high and a down day, right? A little more, a little more dicey. I mean, I don't mind, you know, if someone's looking for a cheap shot on the upside without getting your face ripped off, you know, you could always look at a, you know, let's just say we thought, you know, let's get a vote here, Mark. How many of you think we can bounce from here? Tomorrow's going to be an update. You know, we're bouncing off the 50 and tomorrow's going to be an update. How many of you think that? Any yeses? There's got to be at least one yes here. Any yeses? Think tomorrow's going to be an update. We'll bounce from this. Anybody? All right, Frank dips his toe in the water. Gil's following him. Gary.
It's overdue. I don't know if it's overdue, but it could.
Yeah, I don't, Bob, but here's a way to get long in a, you know, when you think about SPX as a $3,300 vehicle, right? So here's a way to get long cheaply in a $3,300 vehicle. So if you think, like, for example, let's just say you think tomorrow or the next day will be up, right? And you don't want to put a lot of capital, and you don't want to get your face ripped off if you're wrong, right? We would call it like a time bomb butterfly, right? Because on the way up, volatility will come down. Plus, if you, the key with these directional butterflies is you got it right, Mark, you got to get the duration right.
You absolutely do. In any butterfly, that's key because you really want to be in it closer to expiration.
Yeah, so because if we're looking for it to come up and, soon, I'm thinking 10 days, Mark, something a little
Mm-hmm.
closer in. So if we go out maybe to like the 3440s for the shorts, I'll just give you an example, folks, of one that, here's 3440, maybe go 20 down, 3420, this would be calls, and then 3460, something like this. You can see, again, a cheap way to play the upside. Here's $1.25 with SPX at 33.56. We're putting our short at 34.40. And over time, this is 10 days, over the next 7 days, this purple line, which is the graph today, will start going up. Now, you can get it a little wider, cost you a few more shekels. If you make it 30 wide, here's 30 wide, and you can see it's a little bit wider, but you pay up to $285, about $280 with the short strike at 34.40. And we're currently at 33.54. This is 10 days out, but you can see as we go into the future, this is a 10-day trade. As we go into the future, you could see we get into next week, this purple line starts going up, right? And you could see this purple line is, it's up at like $200 on a $275 investment.
Right.
A heck of a return, right? And you got a good range on this thing. I put it here, the date 9/16. 9/16 would be next a week from this Wednesday, and a couple days before the expiration. So that's a cheap way for $260, $280 to play a $3,300 vehicle. Could you use the calendar to hedge the delta for condors? I mean, the iron condor, I was basically delta neutral. So I didn't need a calendar to really hedge it because I was pretty delta neutral. Bob says you need to be careful with SPY dividend. Okay. And
yeah, you got to watch that. True.
Yeah. So anyways, I think, so folks, these are some of the things Mark and I will talk about, but again, the class, it's a 4-week class. It'll go 397. We'll be meeting on Tuesdays and Thursdays at 1 Central for about an hour each time. And I just think it'll be a big help to you, especially for the reasonable cost of the class, to help you navigate through these. You can see what trades we're putting on, what changes we're making, and we've already made quite a few changes as a result of the last 4 days. And you can see how we're changing it next week, how we're setting up into the earnings and the election and post-election. So we'll be launching this next Tuesday at 1 Central. So you can join Mark and I. Will both be on there. We'll be doing live trades every class. And all you'd have to do is go to SheridanMentoring.com, and there'll be information on the front. You can sign up, and we look forward to having you. So we'll see you guys next Tuesday. Sign up today. And thanks, Mark. Appreciate it. And we'll see everybody then.
All right. Bye-bye, folks.
Thanks.